Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Good morning, everybody. Welcome back to another live stream. Hope you're all doing well. Like you just saw there in the ad, if you want to check out 8cap, it is a pretty sweet deal that they have set up for you. You basically get the Edge Finder for free. They buy it for you if you create an account with them. A lot of people do it, and you know, it's honestly so worth it. I can't trade with 8cap because I'm in the US, and CFDs are not a product that are legally accessible to US traders. So, you know, regulated brokerages like 8cap will not accept US clients. But if I could, 100%, if I had a 10K account, 15K, 20K, you know, live account that I wanted to go live on, I would swap over to 8cap and get a free Edge Finder. That sounds like a pretty crazy, awesome deal to me. So we set that up with them, and a lot of people take us up on that offer. It's been great for everybody involved. 8cap gets a client, as you saw in the opening there. You know, we see someone purchase the Edge Finder, but not through their own money, through the broker's money, which is just awesome. Terrible ADP numbers. Yeah, they were a little lackluster here this morning, to say the least. You had 22,000 jobs added compared to 46, so they were softer than expected. And so didn't see too much of a response from the dollar, though. Take a look at the 5-minute candle. You can see a pretty mixed response. ADP just seemingly not causing a big stir. Let's just take a quick look at gold. ADP numbers. You can see a little bit of up move here in gold. Silver has been on fire here. It doesn't look like it pales in comparison to the big down days, but you are seeing a really solid bounce, up 25%. That does not look like a 25% move in silver. Just goes to show how volatile these things are right now. Lee in the chat says, "Hey Nick, does the Edge Finder have a correlated pairs table?" It does not. You've got those all over the internet if you're looking for like to do a study on specific currency pair correlations to one another or something like that. But yeah. Let's see what we've got here happening today. So if I take a look at S&P 500, it's been an interesting earnings season here in the US. We've had a couple companies. It's a very harsh earnings environment. That's what I'm going to describe this one as, because you had companies like Palantir put up remarkable numbers, really impressive stuff. And while it did cause a bump in the stock and the stock jumped, expectations for stocks right now, whoops, I did not mean to click that. Expectations for companies are just very, very high. So we had stellar numbers, really great outlook from Palantir. The stock jumped and pretty much yesterday faded most of the gains, and now following through to the downside, down another 1.5% here today. So you have this interesting scenario where a lot of corporate earnings are coming out and getting smashed. I won't shy away from it. Here's my disaster with PayPal. I sold puts on PayPal just before the stock dropped by 20%. No fun, and definitely not my brightest moment. But hey, with trading, you just never know with certainty what the markets are going to do. And so I had the idea. I like the company. I've liked the company for a while, but the market doesn't agree with me. This stock has been a big loser over time. I started buying. I did well with PayPal before. I bought shares and made some money on the way up, and then I bought shares again. And recently, I clearly sold puts a little bit too early. And I'm now in this situation where I have a losing trade open. What happened? Earnings weren't so great. Guidance wasn't particularly attractive. And they also mentioned that they were going to be swapping out CEOs, or I'm not sure if they're firing the guy or letting him go or whatever, but they're going to change CEOs too. So the market just did not like that. So PayPal got smacked down. And so there is a trade that's not going super hot for me. But let's see, we also have Hood earnings coming up. Who else do we have? We had Disney come out with their earnings, again, get smacked down here. Microsoft came out with their earnings, smacked down. Who else do we have? Meta was good, but even look at Meta, right? Even Meta with stellar earnings, right? Remarkable earnings, up and then faded. So you're seeing this behavior. We have to acknowledge this. If you trade indices, you should be looking at this stuff. If you trade indices, if you trade the NASDAQ, if you're a swing trader, if you're even a day trader, to be honest, should be recognizing the behavior around corporate earnings and the stock market's responses to them. Because if you're in a tough crowd type of earnings environment where people are just not very impressed very easily, what that signals is that stocks have very high expectations, aka valuations. And that's what we're seeing right now. You've got all these companies that are very, very pricey. And don't even get me started if you want to talk stock market world. The software world is getting nailed right now. Like software stocks, Microsoft, ServiceNow, Salesforce, Adobe, all these different software solution companies, they are getting absolutely nailed in the market right now. This chart is a ETF that holds a bunch of some of the most incredible companies on earth. And yet it's getting hit. Compare that to the S&P 500 and you can see it's a very different story. Why is the S&P 500 holding up so well? Well, it's because you have other areas doing great. Like, for example, on the tech side, we have semiconductors still doing really, really well. What's going on with the software world? Well, here's what's happening is a lot of people are worried that application software is going to be very heavily disrupted by AI. Why would you, the idea is like to build all of this software, if you could use AI to build it instead, what's the point of having such high valuations on these types of companies if you can more easily use AI to replace software developers and things like that? And I personally disagree with that. I think that software names, there's some stuff that will certainly get disrupted by AI, but I think there's a lot of software companies that are getting nailed right now that are not necessarily going to be completely disrupted or may even benefit from the rise of AI. So anyways, I know that's kind of a little sidestepping to what we usually talk about on this channel, but it is something that I'm watching really close in my own trading and analysis and figured I'd share. I do think that there is some uncertainty around the US indices and that you could get further pullback here as that story plays out. I think if you lose technology stocks, I just don't see the market having a remarkable year. If you continue to see concerning selling in software names and that sort of thing, I don't see an environment where everything else just picks up the slack and we go higher across the whole indices. You might have a flat year or a slightly negative year, but tech is so heavy within the S&P 500, within the NASDAQ especially, et cetera, that you need those companies to be roaring higher in order for the index to be going higher. There's only so far the index can run if tech is just getting taken out back and beaten over the head, right? Anyways, let's talk a little bit about gold. Gold has continued to rebound very sharply off of this support area around 4,500. Really strong demand coming in for gold. I will continue to say what I have been saying. I'm a bit cautious on precious metals. I just don't have a very solid conviction on where I think they're going, to be completely honest. Really, what's caused me to be a little bit concerned is actually some strengthening scoring within the US dollar. US dollar's got a +3 score here. We saw manufacturing PMI data come in very solid. Today we get services PMIs. Keep an eye on this. GDP growth, solid. Retail sales, beating expectations. Institutional money, buying US dollar. The jobs market is definitely going to be your weaker component. Higher than expected producer price index and 2-year yield. Those things are going to be more supportive of a strong dollar right now. So for me, when I'm looking at this chart, I'm saying, okay, if I think the dollar could have some strength to it, that I think it may have gotten a bit oversold here, and we're now seeing a little bit of a retracement, what I would watch for is that if you're a bull on precious metals, watch the dollar index around 61.8 to 50% retracement. If you get a response here, right, then perhaps precious metals can continue their run. So I'd look for some rejection candles. I'd look for some false breakouts, some failure there. If you're looking at the gold and silver chart, I think the dollar is sort of a steadier chart to look at, as the high margins and kind of all the craziness happening in precious metals can sometimes be that the price action's wild right now, that my thought process is you could just keep an eye on the US dollar. But yeah, Nick, I was expecting to have bought the dip in gold. No, so again, you can always pretty much, I know this sounds like a pitch, but it genuinely is the system that I trade. If you have the Edge Finder, you'll know if I'm going to buy or sell something, or if I'm considering buying or selling something. Edge Finder doesn't tell me, oh, go buy it. But if gold has a neutral reading within Edge Finder, there's a 95% chance you will not see me buy gold, right? Because what that tells me is that my system, I'm highly systematic in my trading approach. Edge Finder is the system that I use to screen. So if my screener says neutral, you won't catch me just taking a stab at gold longs, right? Because I don't trade like that. I'm incredibly, I have to have the check mark from my system in order to execute trades, and it has saved me time and time again. Many times have I wanted to, oh yeah, this looks like a good buy here. I don't want to miss this. And straight away, anytime I've strayed away from the system that I use, I found myself more in a troublesome spot than not. Not to say that my system has a magic indication of what's going to happen next. That's not what I'm saying. When I stray away from my system, psychologically, what have I done? I've betrayed what has worked for me in financial markets. Staying systematic, following my rule set, managing my risk. The second you start straying away from your path of, pre-planned strategy, something can go terribly wrong in your trading. So yeah, I'm always 100% of the time, I'd say 99.9. There's sometimes where there's a very rare instance where I might take a trade that's not Edge Finder related for my momentum strategy. Almost always, I've got to have a solid read for me to place money in the markets. And I think that is, that you might say, oh, that's admirable that you've done that. No. That's like a tried and true. I've learned too many hard lessons doing the opposite to now stray away from the system that's gotten me to where I'm at. I'm going to stick with it all the time. So no trades for me on gold. If I'm looking at silver, silver's even got a -5 reading. We have flipped bearish on silver. And that's crazy because we haven't had a silver bearish reading. I can't even remember last time. Am I going to short this one? Well, we have a -5. So this is just tapping into bear territory. The technicals are starting to look a little rough here. I kind of agree with that. I do think that you have the potential when you're looking at silver. I think you could continue to move lower. We've talked about this many times on the stream. I mean, if you're looking at this from a past support potentially turned resistance area, but if I were to take this trade, because it has just barely a bearish reading, this is going to lean more into a very small, if I were to take this short position type of trade. But I am curious, you are seeing the retest after this big move. And I do think that there's, in the short run, a very solid potential chance that we see silver and gold continue to pull back and test some of these moving averages. This is healthy stuff that's going on. So, the longer term traders, if you're a dollar cost averaging type of person, if you're building a position, you're probably like, bring it on. I hope it goes down lower so I can get some better prices. So, yeah. Anyways, up next, we're going to bring in, he's joining me on the show here, my good friend Chris Pulver. We'll take a look at some markets together this morning. We'll swap him in here and see what he has to say. Hey, Chris, how's it going, man?
Good morning.
So do you agree with me on precious metals? I think there could be a little bit more of a pullback here to this.
There has to be.
Okay.
No, look at the 200-day moving average. I've been on that horn for a while. This is what I posted this like early January, said by end of March, gold showing signs of a correction to the 200-day moving average. To me, if this is going to obey technically, I'd see this playing out with a high, low, lower, high, lower, low. Yeah. Pretty simple stuff. If it comes back and it goes all the way back to the highs again, I'm not taking the bait. I think this is still going to at least be consolidation, and it's a massive area. I mean, we're talking in double digits. I know that we had a 30% correction in silver. Gold has pulled back around 21%. So there's still more room to go, man. And I think we have to at least find this 200-day moving average creeping up on 600 bars. Just let it shake out. I mean, if you took a stab at this and bought a little bit, that's fine. That's what I did. I'm still looking to kind of build and base and use the bigger picture. Like, I think that what this caused is more people came into gold and silver than ever before. And I think that's exactly why we had such a big shakeout. Did you see that the option volume on gold and silver going into that kind of fateful Friday was as high as the SPY? Like, that's how much volume there was on buying calls. And I mean, it just was a perfect like contrarian setup.
I did see that. And, I've heard a lot of people talking about too, that this recent kind of surge in interest in silver and gold has possibly come at the cost of Bitcoin. Have you heard that little conversation going on? I think that's pretty valid. Like, I think you could be seeing, well, actually, I'm going to go out on a limb and say, actually, you have like pretty good evidence that is what's happening. Because I was just listening to one of the, I can't remember what her role was within Robinhood, but she's, one of the market, kind of high up executives that watches, retail activity within Robinhood, not from a sinister perspective, but simply servicing their clients, right? They have a huge retail client base and she was studying what has been, or talking about this very subject. And she said, we've seen surges, dramatic, her name is like Cameron something, you guys can look her up. I was listening to her on CNBC. She was telling the audience basically that the amount of trading activity through silver and gold, SLV and GLD, has been significantly higher than usual for the last 30, 60 days. That's not saying very much. But also at the same time, that same crowd, right? We know the Robinhood crowd is the retail money. It's the quote unquote dumb money that
right.
also sometimes gets it right, by the way. That crowd is piling money trading in the precious metals world. And so I can't help but think that that's pretty good evidence that that's possibly taking away attention from the Bitcoin crowd. Just at the same time, where I'm going to stick with this, I still think that there is some unwind silently going on in the background, slow, steady, consistent seller from the Bank of Japan stuff that we've talked about over and over.
I agree. Well, I'll keep My thoughts on where we go next, really, really simple. Yesterday was, what seemed to be a pretty decent sell-off was met with support once again. And so we're just trading sideways. We have, you can go back to, I guess we established this range on the 22nd of January, 1, 2, 3, 4, 5, 6, 7, 8, 9. Today's day 10. If we break below, 68.50 with a convincing daily candle breakout, or we break above 7,000, I think market, that's its next direction. Now, we go back to this rising wedge pattern. I still think that the market, kind of needs this correction. Of course, it's going to feel awful if it happens, right? If we break below 68.50 and we drop to 65.50, nobody's going to like that. But I still look at that as an opportunity. I know you said, Nick, that you were loving the software stuff. How you feel about yesterday's kind of obvious software sell-off?
So yeah, I was going to ask you about that. So IGV getting absolutely nailed and down another 1% almost here this morning. It is a standout on an island kind of underperformance right now in terms of a lot of the rest of the market. As it gets closer, I'm feeling more attracted to taking some stabs at some stuff. I did, Chris, yesterday. I sold some out of the money. I got some decent premium on this one. I sold some out of the money 175 puts on Salesforce CRM.
Okay.
So I sold some puts there. What else did I do? I also did Netflix. I know it's not
I saw that.
exactly.
Was it 70?
What'd you say?
Was it 70? What was the level you picked on Netflix?
I got 70. I sold 70 puts, 45 days out. Tasty trade 101 stuff. So yeah, just kind of a basic concept. I think, Netflix, I don't think is going anywhere. I think it's still, I've been interested kind of thinking about I want to stay invested in really solid marketplaces that already own, kind of the consumer base. And I think Netflix continues to be a staple home, household name. It's under a lot of pressure with the whole Paramount purchasing stuff, but I think they'll figure everything out. And I think they'll continue to be a strong place to be. So if we get, if we continue to plunge lower, I kind of welcome it. To be honest, I still have a lot of cash sitting in my portfolio, Chris. And if we get a downside move, I'm ready for it. I actually hope the stuff that I'm selling puts on gets assigned, because I feel like, okay, I'm getting some decent prices on stuff.
Yeah, I never love the assignment. Although I always say I'm willing to take assignment because I am. Right. And I was reviewing just everything this week. Yeah, that probably could be the case. Is I get some shares, I repair some stock. If I really like something, I'll hang on to it more. I'll incorporate options into the campaign position. But I am, I am taking a decent stab at not inflation. I was going to say I'm taking a decent stab at energy. So XLE, pretty simple. This is just the energy sector. XOM. ExxonMobil's on a pretty nice breakout. Couple of naked puts and ratio spreads. I want to just buy the shares, but not right now. This breakout, I'd love to see either kind of a bull flag look for there's more upside, or if the market does fall and let's say we get a 5 to 7% correction and everything goes with it. That tends to be the case. It's not like one thing does really, really well when the market's down 3 to 5% or 5 to 7%. So if there's a chance to get a pullback towards 125, I think that's a good position. And also, Nick, I'm on this bandwagon for 2026. I probably should take a bigger position in it. But it's probably not going to be the case. It's going to be a percentage allocation, but going international. We've talked about it, but Brazil is.
Do you own any India, INDA?
INDA, I have some naked puts on it. That's all right now.
Okay.
But
that's one I was kind of like, dang, I wish I had, pulled the trigger on some of that, because 2 back-to-back deals with Europe and US. those were banger moves for India. So,
and it hasn't quite moved yet. So what I'm doing is I've got to put down here at 47. I've got a 47, 45, 47, 45, and a 40. So it's staggered in there. Obviously this could break and I don't get any assignment and this would be off and running. But just looking at the structure, we've spent some time kind of pulling back, consolidating, consolidating. This is a good spot to be looking for that. If we get our next run, get in here, even a stop loss below 45 seems pretty solid as far as, don't ride this thing forever. But it looks good. I think, in Nikkei, I know you have some exposure to Nikkei, so do I.
I was going to say, we're
I don't know
breaking
what's
out
going to
today.
happen on the
Nice
Japanese
little
yen.
move on the Nikkei this morning. I've got EWJ, the ETF is what I'm trading, but for tracking purposes here, just looking at JP225 breaking out here. And yeah, Chris, to your point, I like this relative strength quite a bit. I mean, look at this chart. Look at. I know you're watching the South American stuff, right? You got Brazil breaking out. You got that one ETF. What is it? ILF or something like that.
Latin America.
Yep, Latin America. So you've got this relative strength here that is spilling over from 2025. I find that to be really interesting. And Chris, it felt impossible a year ago that you could have technology stocks underperforming, but now it feels entirely possible, right? It actually feels like international stocks and the rest of the S&P 500. If we're going to quote unquote run it hot in Japan and in the US, that could still lead to Delta Airlines, like or Costco, like all these other random companies that are not necessarily technology focused doing well, but it could also lead to a weaker dollar and a stronger international stock market rally. So yeah, I like the trade, and for me, I'm long the Nikkei. I'm going to probably trail a stop on this one, just lock it in behind here today, and just kind of continue to see if I can enjoy that move.
Yeah, I think that's a good play. And again, the hard part is like, what's my allocation? What's my percentage on this? Of maybe at most, I'm going to do like a 50% equities. I would say of that 50%, I'm going to say 10 to 15 of it I want to be international, because the rest is like, yeah, I'll sell puts. I'll take my typical ratio spreads, my income trades. I've posted quite a few for Pulver Alerts this week. I'm trying to think what some of those were. I think we did one on silver. So I'm taking some stabs at silver. If I own silver, by the way, it's going to be in like the 30s. So it's certainly going to be a big discount. Let me take a look here and see where new trade in Uber, new trade in Amgen, new trade in Chevron, and you got a couple trades in silver. I also took a stab at EM.
So did you see the move on Uber this morning, Chris?
Nope, they had earnings this morning. I
saw they were huge and came all the way back.
Okay. What were they? What were that pre-market? I mean,
as low as 69.50.
What? Oh boy, that's that. Okay, good for them.
And then
for
came all the way back.
Yeah, I mean, did they didn't. They missed on earnings, a little bit on revenue.
Earnings, they beat on revenue. I haven't looked any closer than that, but I'm imagining that's going to be something on the call or something was said, some guidance that people were optimistic about. So, options traders dream there if you're selling premium on that one, because you just basically dropped and came back.
Yep. Okay. So I priced out the earnings, and it just didn't love it. So I'm like, oh, let's go out longer. I like Uber. I'm hoping that they are in the space of, this whole shift to autonomous vehicles, robotaxis, you name it. I'm thinking we like a box of Kleenex. It's the brand name. When you're a rideshare person, you're saying I'm going to get an Uber, even though it could be Lyft or some other company. So it's like, I think that's a strong thing for Uber. That's a strong case for them. I just hope that they're not like, I get it that, you're going to displace, I don't know, hundreds of thousands, if not millions of 1099 workers, like their drivers. But for a company, it's like, yeah, I mean, at the end of the day, if we're going fully autonomous and these cities are at least testing this right now, that could be an Uber fleet, as you could have Uber cars that are driverless taxis essentially. So I'm hoping they're in that game. I'm hoping they're in that space. I'm not any further out as far as big picture trading is. I'm about 12 months out. That's about as comfortable as I am going out and saying, okay, I'll embrace whatever 2026 is going to be. I think it's going to be a big story in international performance. And again, like for everyone to chase and think like this is going to be the way it is, that I find hard to believe, because you have to remember, if the world is going to look great, Japan's going to kill it, Europe's going to kill it, China, India, everything's going to look great and outperform the US. It still needs US to be decent. It still needs US to be stable. I mean, the US could be plus minus 5s, plus minus 10s, but the US can't be down 30 and the whole world's like, we're killing it. It's not going to happen. The US will drag the whole world lower. Even with this idea of like we're all fleeing the US and it's all repatriating dollars to our own fiscal policy. I mean, this is a crazy incentive. I heard this in Japan. or no, I'm sorry, South Korea. They were willing to let their investors, if you're South Korean and you had money invested in like US tech, like Nvidia, zero capital gains tax. If you just exit your position and start putting it into South Korea's economy. So if that's one type of policy that countries are adopting for, like, money's going to go where it's treated best, and if there's no penalty for taking tons of gains out of a great market that's been killing it for 10, 15 years, I mean, you can take a stab at your home country. It's not as liquid. It's not. I mean, I don't think that any like one country or one international market becomes the U.S. But it's certainly time where that American exceptionalism is starting to crack a little bit. So that's literally what I did a session on yesterday, just because that is what it feels like. We have a lot of rotation happen in the U.S. It's going to be like a stock picker's dream and nightmare for 2026. I'm trying to play, the energy side, a little bit more defensive, selling lots of premium. But I also want to make sure I'm not overexposed. I still have about 50, I guess 60% cash still. And I will try to keep that until I see maybe some outlier opportunities we can jump in on if that's going to be offered up this year.
Yeah. Yeah. Another thing that's kind of got my attention here right now, Chris, is yields following the new Fed chair announcement or nomination.
Yep.
Yields continuing to remain kind of elevated here on the 10-year yield. If we look out a little longer term, 20 and 30-year, also kind of still on the rise. At the same time, 2-year yield initially dropped on the news, but has rebounded here a little bit. I don't know how much of that is just the Fed chair stuff, but I imagine some component of it is. And maybe more importantly is that if we were, if the market was expecting the new Fed chair to be incredibly dovish, like an ultra dove, this would probably, at least on the 2-year yield, right, would be me making a stronger move lower. So I think the market's pricing in a little bit more of a stronger dollar here, at least recently. You've had a rebound up on the dollar index. I'm really curious to see as you come back into, you have some levels of resistance here that previously acted as support. I'm curious to see if you do get the rollover or if the bulls are able to take it back here. And, today we have services PMIs, which could help to kind of make a decision there. If you get a really strong services PMI number, dollar index could be breaking out of that 61. I would say if you get back above that 618 retracement on this dollar index move here on the daily time frame, you may have some legs here. This may have been a false breakout here on the dollar, and we may actually see a resurgence back up to, next area I'd be looking at would be like 99.5. So I'm curious to see, we are not going to get an NFP report on Friday. They did postpone it due to the partial government shutdown. But if you get, solid services PMI numbers, if you start to see the economic data continue to surprise to the upside for the US, you could get a rebound in dollar that has some legs to it. And I'm curious what that does to precious metals, but also what it does to the markets, right? You've had S&P 500 in this grindy sideways market. You've already kind of got some jitters really around software disruption and the debt spending. And now you have this little drama flare up between OpenAI and Nvidia right now. The breakup, that, not actually any sort of mega threat. They need each other, but, just a little bit of shakiness in the AI trade. And that in combination with the Fed may, stay on hold longer, may be decidedly kind of neutral for a longer period of time. If inflation starts to rise up, there are the downside risks to this market that I think are very real. And, right now with this choppiness, one thing I think about, investors are skittish, right? So if we keep seeing this pattern where we head to a new high and then we sell into that, right? Head to the new high, we sell into that. You start breaking through the lows, you could very well see some of that, euphoria trade that's been going on for the last couple years start to really take some profits, as you mentioned, the South Korean situation, but that could be broader in many ways. There could just be sort of all right, we've had a remarkable run up. The easy trade for AI stuff is behind us. The rate cut story has been checked. I'm not outright bearish on the market, but I do think that you have the recipe here for a perfectly normal and healthy, let's see the market pull back 5-10% and reset a little bit.
Right. Yeah. I mean, if it does, like 10% or more is not going to feel good. 3 to 5%, we had that during November, right? That little rollover was like a 5 to 6% correction. The S&P, I think we had it's like 7 or 8% in the NASDAQ. But it was like, it bottomed out, I guess, in that NVIDIA sell-off candle, right? That was November 20th.
Yep.
If it rolls over again, I've warned, like, this is the weakness window. Once you get through those big leaps into the monthly January expiration, now that February, March, April, this feels an awful lot like how we were kind of having that distribution phase late in February in 2025, and it just started to roll over. And it was, Mag 7 rotation was happening, and then you throw a trade war on top of that. That's how you get a peak to trough of 20%.
Yep.
I don't know if that momentum were to kick in again to the downside, what exactly would be the response as far as, this was a Trump response, right? This is the taco trade, the birth of the taco trade on April 7th. I was, on my way to see you guys that week. And It was insane. That week was insane. The candle for the month was down 15%, finished 1% flat, and then we were bullish for the rest of the year. So is it that easy? It's like, just wait, just have the cash ready. Or is it going to be more weeks of this grind fest, which now we're looking at, I said like 9 or 10 days of indecision, but we're looking at like 4 weeks of indecision. And really the market hasn't gone anywhere. I'd say this is that response to that November 20th candle. We established that high, right at the first part of December. We haven't really gained anything since that first little green push in December. It's been very, very choppy to the upside. And at the same time, Nick, I had some trades yesterday. I'm like, well, maybe I can sell like a 7150 to 7200 kind of call spread, or do like a broke wing butterfly and give myself some upside traps and whatnot. But I'm like, I wouldn't put it past the market to have Google today, Amazon tomorrow. Market's kind of reassured that Mag 7 is still strong and kicking butt, and then we're back above 7,000. There's actually some momentum there too. It just wouldn't surprise me. So, my next stage is I'm watching this stuff closely. I want to see if we get a convincing breakout one way or the other. Mag 7 wise, we've had at least a decent jump in Apple. So if you look at mags across the board, I'm kind of looking at this corrective channel for right now. But take a look at Apple. Apple is up, possibly some more, retesting of highs at 290. It's up today pre-market, which is decent. Amazon still has room to go up. It's pretty well postured. I'd say that what's dragging, your top 10 stocks down, your mags or your top 10 stocks. Broadcom sitting at a pretty major support level. This is one to keep an eye on. If we get back above 340, then I'd say Broadcom probably looks pretty good back to retest highs. If it's going to be a further correction, like that's going to weigh on Mag 7 and everything else. Google looks great. We have earnings today after market. So is Google going to come in with amazing beat top and bottom earnings? Maybe. If it does, awesome. That's reassuring. Meta, big gap up, but it's filling. Microsoft struggling. Like, this is now like one of the worst performing Mag 7 stocks, and it is trading. It's not Liberation Day lows, but man, are we getting there? And part of me is like, should I be selling premium on Microsoft, or is this a software company? It's not, but it's like, is that how it's being treated right now? Is this in the software space? Your Windows or your Microsoft Office, all that stuff is like, is that what this is being treated like? I don't know. I wish Microsoft would. I don't know. It sucks to see a company that's had such an amazing 15 years and has been a front runner. Like, yep, we're going to be in the AI space. Microsoft is, but cloud computing is different, and it's like it's being treated like a software company right now.
Yeah, Chris, I've got a chart of the day for us here. We do this pretty much every time we're together. So you kind of alluded to it, taking just a quick look at seasonality for the month of February. So what we are going to be looking at here is the last 10-year average return of a couple markets in specifically the month of February. So when we take a look at, for example, the Dow Jones, you can see that in February, you have a average in the last 10 years of about minus 0.8%. So a negative bias on that front. If we also just switch over to NASDAQ, you can see a minus 0.38% average return over the last 10 years. S&P 500 minus 0.44%. And then it actually goes global too. The Nikkei actually seeing a minus 1% drop over the last 10 years on average in the month of February. So just something to look at also with the DAX minus 0.35%. So just kind of something to consider is, February is historically going back to like 1950s. It is a slightly negative expected month. for the S&P 500 and the NASDAQ. Now, does that mean that you should just go selling these things because, hey, February is negative? Not really. These are not huge. It's not like, oh, you sell in February and you make a quick 5% on the markets, right? It's not that easy, but it's showing clearly, to your point, you have a little bit of rockiness in the month of February going back over time. And so I think it's entirely possible that if we're going to see a little bit of a shakeout, a little bit of a volatility event, I've said this a little while, a couple times here into New Year's. I think that the volatility event could be sooner rather than later. That you could have this AI concern spill out. That you could see further downside. We also have, uncertainty surrounding the whole Iran-U.S. situation. You have tensions there that could spill over into some sort of continued spike in the VIX. We did see some action on that yesterday. Volatility has risen a good bit from those lows that was, end of year. So we've seen a little bit of a spike in volatility, but nothing blowing out anywhere. But continue to watch that because I think it could be an interesting play to for me personally, how I'm handling this. I'm cash heavy. I'm waiting for dips, and I am, ready to act if there were some stuff that continues to get sold off. Specifically, yes, I am watching IGV. I would like to pick up some IGV if we saw a continued sell-off. And I know it looks like a faraway drop from here, but man, look how fast these things are moving. Another, 8-9% to the downside. Very possible. And this is how stuff happens, in markets. Chris, you know this really well. You've been doing this a while. So narratives like this, they can spill over. And a lot of times, not always, but a lot of times they end on sort of a dramatic, loud ending, like some sort of, you had the flush yesterday, but I'm talking a potential real flush, like where you really see that blowout, the big spike in volatility, and oftentimes that can kind of be the source of kind of a bounce opportunity where you get some forced selling, some deleveraging, kind of like I think we're sort of seeing in the precious metals right now. You had that. I think you're seeing a bounce. The question of follow through to the upside is TBD, to be determined there. But I think that some of this selling pressure that took place in the precious metals, I do personally think was also a combination of forced selling and not really too much speculation there, because we know that the COMEX raised margin requirements on precious metals. So there was some straight up change in margin that very easily could have triggered some margin calls across the spectrum of both retail and institutional investors. So, I'll say it. I'll go on a whim. I actually think, Chris, there may be, for me personally, a small stab. I can't believe I'm saying it, but reversing the trade and actually looking for some small short size positions or short-sided positions on silver, maybe playing for that further retracement down into some of these moving averages, of which, by the way, I know myself and many other longer-term precious metals, I know you too, Chris, would love that, right? That's constructive. We could build into that and find some longer-term valuation play. So if I were to take this trade, just a little bit of a heads up, if I short silver, it'll be with a small stop, and I'll get out of there real quick if I'm wrong, because this thing could continuously melt up higher. It is very possible. Never say never, and it would be a small risk with a stop loss on it.
Sure. I think that one play I might look at for silver is like I'm doing, which is just positioning for anything like sub 40, sub 50, as far as taking ownership. There might be a way to, let's say we pull back, high, low, we hit like 50% or 60% ish on the way back. We could also retest the highs. I think I'm going to try to build a position here that might be very low cost and super high risk. Or I'm sorry, super low risk, high reward. I'm trying to think what that would price out to be. Now, I don't know if I want to go after, fresh lows, or maybe I can look at a pin price around maybe 65 as a pin price. I'm curious what this would cost me. I'll take a look at this today, but because this would be trading the stock SLV. Mm-hmm. I could do silver futures as well. That's 23 hours a day. Let me see if that actually is a better feed. Let me go SI for futures here. So now we have a little bit more continuity in the setup. This one might cost more. I mean, it's a silver futures contract, but let's say maybe like 65. Let's look at this one. So let's go silver. Timing. I mean, again, timing will be really important on this one. If I did a trade looking at like 65, so by March, April, as long as it doesn't cost me a bunch, 50 days out, maybe 82 days out. Let's see. So silver, if I could position this, I know we have to go here in just a minute. Let me just try to take a quick step. I'm gonna look at 65 as a pin price. So if I did let's go 75. Geez, these are so many strikes. 75.
Wow, there's
a ton, right?
Nickels and dimes in there.
Yeah, so 75 by 65 by 55. And this is essentially a big old profit trap, and then put it in here. So, I mean, that's what I didn't want. Is this why I would look at SLV, because I can make this much cheaper. But essentially, I can set this up with like a 5-to-1 or 6-to-1 reward to risk. So if I can keep this risk under like $500 or $1,000, I mean, it pays like 6-to-1 or 7-to-1. I don't have to be perfect. I just need to see a little bit of continuation to the downside within an 80-day window. I could probably turn this, Nick, to like a 1-to-1 or 2-to-1, which isn't a bad trade. But again, I'm certainly not going to throw $7,000 at it to be, shorting silver. So let me trim that way down. Probably put it on SLV. But something like that is likely going to be set up if you want to look for an inexpensive hedge that offers 5-6-to-1, which wouldn't be too bad.
Should be interesting to see. And of course, Chris, we've got all sorts of plays that we're looking at. For listeners, if you guys want to see the trades that we're taking, it is something that we offer as a service. Chris has been in the game for 20 years. I've been in for just over 10 years at this point, watching markets every day. This is what we love. This is what we, are spending all of our time doing. If you want to see the trades that we are taking in real time, we post notifications to members inside of our Discord. If you're interested in signing up for those alerts, if you want to get access to them, send us a direct message. Here is the link here in the live stream chat. Speak directly to a member of our support team here at A1 Trading. They can get you set up with access to Chris or my trade alerts, so that you can get updated anytime we take a position with full context, breakdowns, analysis, why we're taking the trades, etc. It's a great spot to be if you're looking to learn and also to see the trades, like I said, that we are ourselves taking, so that you don't have to sit through a live stream to hear about maybe. Like I'm watching silver, Chris is watching silver as well. We got all sorts of different plays that we're considering. And we will update you there if we take any trades. Chris, thanks very much for coming on to the stream today, and we will see you back on the next one, man.
See you tomorrow.
See ya. All right, guys. Up next, we have, of course, Marco from Marco's Trading Journey. Stay tuned. He'll be up just after this quick break. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello, everyone. Welcome to my segment. So let me just get everything set up. First order of the day, I have the jot form for the giveaway. So in the comment section, you have a link to a form. Fill out the form. We will get your name, your information, and then you'll be entered into a DNA Funded challenge giveaway. So in 15 minutes, I'll put up all of the names into the wheel of names. We will spin it and we will see who is the winner. Now, time for the charts. Nikkei moving higher. This position is working out nicely so far. S&P is break even. NASDAQ is negative. The DAX is also in the red. So essentially, out of all of the stock markets, looks like the Nikkei is doing okay, while the rest of the equity market seems to be selling off. Gold is, I would say, doing okay. Silver pushing higher as well. I'm personally looking for buy setups on gold. I know that Nick just mentioned that he is maybe gonna sell silver, that he is maybe looking to sell the metals market. I get the reasoning, and that is why I'm super careful with buying gold. I absolutely need to get a bullish reading on gold to be a buyer. So I'm not going to do anything unless I get a clear bullish reading right here. Silver, what is silver doing on the edge finder? Let's see. Bearish, actually a bearish reading on silver. I guess that is the reason why Nick wants to short, why Nick wants to sell. I would say in terms of the market environment, we're getting a bit of a risk-off environment because US and Iran tensions have escalated a bit. Let me see. So silver, if I put on the fib tool, we have to do it from the beginning of the move to the bottom. I think he's looking at the 0.5 level or maybe 6.8. I'm not exactly sure, but he definitely has the edge finder as a confluence. So we shall see. We shall see what happens. On my watch list at the moment, I have, of course, my trade on the Nikkei. I have the Aussie dollar and I have gold. Those are my three favorite assets at the moment. So on a Wednesday. Let's see. By the way, if you have already entered for a giveaway, we have reset the form. So now your email can get accepted again. So every few days, we're going to reset the form so that you don't get sort of blocked out of the form if you have already submitted your email. So we're working on it. And in the future, we're going to set it up so that it resets every single stream so that you don't basically get blocked by trying to let's say, apply for on Monday and then apply on Tuesday and then apply on Wednesday as well. So you can fill out the form. We cleared it for the day. Let me see some comments. Gang Scott, we just got a lot worse ADP employment change. What could this mean? ADP employment change, I don't put a huge emphasis on those numbers. It is kind of a service that, let's see. It is a service that not a lot of people look at. It doesn't really move the markets much. So I can show you on the DXY. I'm not expecting a massive move out of that. Yeah, just in the few last hours, you can see there's nothing. ISM services, PMIs. So markets react to some news events, but then they completely ignore other events. ADP non-farm change is something that the markets tend to ignore. So for some reason, they don't put a massive emphasis on these numbers. ISM services could be important. So that could actually be market moving. Sorry about that. I think last time we had the ISM services, we had a lot of movement in the markets. So NFP is, of course, a big mover. NFP got delayed from this week to, I don't know, maybe next week, maybe the week after that. If you're wondering about the closure of the shutdown, I think we are right now in a partial US government shutdown, but I think that should end soon because we got some news. Let me try to grab it. I'm looking at the news in red. This is it. So US House approves funds to end government shutdown, sends to Trump for signing into law. So looks like they got an agreement. Looks like they got into an understanding, and looks like the partial government shutdown won't last too long, which is good for the markets. So the dollar should like this. The dollar should benefit from this sort of news. Let me go through the calendar, see what's up with the rest of the numbers. We have the Bank of England tomorrow. We have the ECB tomorrow as well. And we have some preliminary consumer sentiment, not that important. If you're just looking at the dollar news, I would say this is not that important. The ADP, not that important. ISM services, yes, they do tend to move the markets. ISM manufacturing PMIs, sometimes they move the markets as well. So you kind of have to know what moves the markets. Of course, you can backtest this. You can look at, let's say, every single time in the last 5 years when the ISM services PMI is printed and what kind of a movement happened after the print. And then you can see what the market reacts to and what it doesn't react to. Joseph, hello, welcome to the stream. Sluggy, hello. Tumas, Marco the Man, thank you. Wheel of Names don't like me. AV, what's up? Welcome to the stream. Bashi, Iran-US talks limited to nuclear issue and sanctions relief. Looks like only talks for now. Yeah, so it says only one entry allowed, but that means one entry per live stream, okay? But you should be able to enter on a Monday, Tuesday, Wednesday, Thursday, Friday. Get one entry per stream, okay? So we're working on it in the background, and make sure you fill out the form. Already submitted. Morning, Marco. Are you watching GJ? No, but we can definitely check it out. What's today's data? Welcome, Bashi, to the stream. What is up, Marco? Any thoughts on USD JPY? Yes, actually, I have a lot of thoughts on the USD JPY. USD JPY seems to be exploding back to the initial level. Just to remind you what happened, this was a panic sell, lots of selling, lots of weak hands in the markets, and now we are retracing all the way back up. The real intervention has not happened yet. So the BOJ has not yet stepped in, but once they do go in and they sell those US treasuries, we could see a pretty large move down. So I think on the 23rd of January, the Fed requested rates, did a sort of a rate check. Okay, they did a rate check. Markets learned about it. And then you had a lot of sellers come into the markets, a lot of weak hands who sold. Seems like the market is going to fully recover. We are starting to print a V reversal as far as I can see. So we're starting to get a V reversal. And if we go to 159 or 160, I'll be pretty happy to get in, because I think at those levels, the BOJ will step in and they will start selling. So I think there could be a good opportunity for a sell limit at 159 or at 160. I think 160 is a bit better. And I definitely think we can reach 160. Of course, you will be notified in the A1 Trading Discord. Every single trade that I take gets put into the A1 Discord as a signal. If you want to join the A1 Discord, there's a link in the description, and you can use the code Marco. Use the code Marco to get, I think it's 40% off this month. Not sure, but you can get a pretty big discount. That's for USD JPY. Absolutely on the radar, closely watching it. Price seems to be very bullish, and this is just weak hands. So a lot of people sold, they realized what they have done, and now they are back again buying. So pretty funny and a classic market occurrence. People get emotional and they sell too much. I am long New Zealand Swiss. Is it a leading indicator? Joshua, welcome to the stream. Elias, EU looks strong. What do you think of the EU pairs? I'm going to take a look at it back to all-time highs again. I'm hoping the rate decisions for EU and UK finally give Euro GBP some direction. GJ also back to all-time highs. Rate check, yeah, it was a rate check. Yeah, but a rate check doesn't mean that they went in and sold anything. So they just requested rates, which is something that central banks do before they do an actual intervention. Okay, just to check how the markets are doing. I think to maybe check liquidity, exactly sure, but a rate check doesn't involve any buying or selling. Link for raffle, yeah. Let me put it in again. Copy. So you can find the link to the giveaway in the comment section. NZD USD. Euro dollar. Okay, so looks like you guys really want to see the euro dollar. Let's take a look. Euro dollar daily chart looks pretty interesting. We had a pretty big sell-off as the dollar kept gaining strength. I think the peak was right around when Warsh was announced, or wasn't that? No, sorry, it wasn't. I think Warsh was announced on the 30th of Jan on Friday, so that wasn't the peak. Anyways, the euro as a currency, I don't believe it's very strong. If you go to the Edge Finder, we go to Euro USD, neutral reading. If we go to macro scanners, heat maps, EU, okay, actually the latest data is coming out much better than expected, so it does look all right. But the US looks okay as well. So the data that is coming out in the US, I know we don't have the NFP, but the current data seems okay, seems pretty nice. So I don't see a massive edge on the euro dollar. Where I do see a massive edge is the Aussie dollar, because RBA is the only central bank that's looking to raise interest rates. So the RBA wants to raise interest rates, and they have already done so. Where is it? Where is it? Yeah, here it is. So RBA interest rate decision, you can see the previous number 3.6, actual number 3.85. So they are raising rates, and they're planning to raise the rates even higher. Fed wants to cut rates. If you look at the Fed Watch tool, 2 rate cuts of 25 basis points are planned for 2026. So this is a perfect storm for the Aussie dollar to go up. Okay. So I like the Aussie dollar. What am I looking to do here? I'm looking to get a pullback to the 20 MA. The 20 MA is starting to catch up with the price. If we can pull back a little bit, I'll be pretty happy. I'll be in it with a buy limit. I know Alan is already in from, I think, this level around here. So congrats to Alan. Great entry. Also, there is a level of support. So we have a pretty nice level of support right here. I love everything about this. Aussie dollar, my favorite currency pair at the moment. Now, time for the giveaway. Let me just check if I got all of the names. Let's take a look. Today is the 4th of February. Okay, 4th of February. Yeah, that's it. So let me copy the names. Put them in our wheel. This is it. And spin. So let's see. AV. Hey, so congrats to AV. You are the winner for today. After my segment, after the stream, I will email you with the free challenge. So the challenge is gonna be, let me tell you, it's gonna be a 10K one-phase account. Okay, you can expect an email from me after my segment with the code for the free challenge. Congrats to AV once again. And now, time to continue with the program. Is this AV? Okay, awesome. So actually, I've known AV for I think it's actually 1 to 2 years now. So AV was a really active member in my old community, and that's amazing that he won. So congrats to AV, and you can expect an email from me. So awesome. Yeah, AV was in Zentum. Gold, I talked about rigged. I talked about gold. What's the game plan? Maybe some of you joined a bit later. So my game plan is to buy it. I definitely want to get into some buy setups, but I do want to get a confirmation from the Edge Finder. So looking at the Edge Finder, gold at the moment, top setups, gold, it's neutral. That's a bit of a problem. So I need to see a bullish reading on gold, and then I'll be pretty interested to get in. I think most of the selling has happened. I would say fundamentally, this is still overall bullish. If we get more of a risk on environment, And especially with Trump, we should get it because we had some more tensions with Iran. We have Venezuela, we have Greenland, we have tariffs. If we get more tariffs, it's going to be a risk-off environment as well. With Trump being in office, drama is a guarantee. I don't see Trump stopping anytime soon with the tariffs and the threats. Also, inflation in the United States is elevated. If we look at the inflation data, let me show you CPI. In the US, inflation is 2.7%. That is above the target. Target is 2%, and that means inflation is elevated. Okay, so elevated inflation in the US, plus on top of that, they're planning to cut interest rates. Cutting rates raises inflation. Cutting rates should be bullish for gold as well. And on top of that, you're kind of getting this whole sell America narrative. The S&P is struggling. The S&P does not seem to be performing very well. If we zoom out, I mean, there's been a slowdown. The last few months have not been great for the S&P, which means money is flowing elsewhere, okay? Money is flowing into Japan, possibly into Europe, into gold, into silver. It's not a full-on crash, so it's not like the S&P is dropping out of the sky. It's still grinding higher, but I would say the new money that's getting into the markets, it's not going into the S&P, it's going into some alternatives. That's kind of what I mean. So that's my take on the S&P. Gold, that's the play with gold. Anything else that's interesting? Bitcoin. Bitcoin looks very bearish. So Bitcoin is in a sort of a crypto winter. We are below 100K. There's a lack of narrative. Price action is super bearish. Bitcoin is no longer this cool thing in the shadows. Institutions are now invested in Bitcoin. What's MSFT doing? No, MSTR, MicroStrategy. Yeah, just looks bad. So MicroStrategy, Michael Saylor's company, all of the equity from MicroStrategy is invested into Bitcoin, basically. So the price is heavily dependent on Bitcoin, and this thing just keeps on going lower and lower as the price of Bitcoin keeps dropping. If we don't get a change of narrative, if Bitcoin does not become this cool thing again, I just don't see any buyers stepping in. There's also some fear online about quantum computing and about possibly hacking Bitcoin, thus making your Bitcoin worthless pretty much. So people are hesitant. It doesn't mean it's going to happen, and it doesn't have to happen, but if there is fear, the price is going to be bearish. So as long as there is fear in the markets, the price is going to react in a negative way. It's going to have a sort of a bearish impact on BTC. Ethereum is probably going to be selling off. Yeah, Ethereum almost back to the lows. I think we're eventually going to hit these lows. So really bad story for crypto, unfortunately. I do have some Bitcoin as a long-term investment, but it's not performing well. It looks pretty corrective. One thing that I do like, so if you look at the NASDAQ, look at the NASDAQ, look at this price action. From the 29th of October, we haven't moved much. So for 3 months, we haven't had any movement. But people are still liking the AI story and they want to get in. What are they buying? They seem to be buying Google. Google seems to be doing pretty well, pretty healthy uptrend, pulling back to the 20 MA and rejecting almost immediately. So if you want to play the AI story, which I definitely want to do, Google could be a good way to do it. You know, NASDAQ is flat, NASDAQ is stagnating. Google seems to be doing pretty well. If you have been following the situation, ChatGPT was the #1 software for AI. Google Gemini seems to be stealing market share from ChatGPT every single month. So Google Gemini seems to be increasing its client base, while ChatGPT's client base seems to be decreasing. Also, you have some news out of NVIDIA that the commitment to put, I don't know, what is it, $100 billion or something like that into OpenAI is not a guarantee, or it was up to 100 billion, I'm guessing. So that's not great news. Not really for NVIDIA, but it's bad news for ChatGPT. But of course, NVIDIA is looking to get into the AI game. They can choose from Grok, they can do Google Gemini, or they can do something else. Looks like they are not so hot about ChatGPT. Just a side note. So the weaker ChatGPT gets, the more powerful Google Gemini is going to be. And the price of Google should be going higher and higher as people want to get into the artificial intelligence story. Of course, if there is a crash on the NASDAQ, if there's a crash on the NAS, you can expect Google to drop as well. Time for a quick break for our sponsor, which is going to be DNA Funded. So if you guys are looking to expand your trading capital, if you're looking to get funded, DNA Funded is a great option. With the code A1Live, you can get 25% off any DNA funded challenge. So A1 Live, 25% off. This code is specifically for you guys watching the streams. This is my personal challenge right here, 25K phase 1. I have only a single trade on. It's a sell on the S&P. And this challenge is specifically for my YouTube series, which is trading using ChatGPT. So every single day, I go to ChatGPT and I get 2 trade signals, one for the S&P, one for a currency pair. I put them into this challenge, and then we see what happens. ChatGPT passed phase 1 and phase 2 of a 25K or of a 50K challenge, blew the funded account, so I bought a new one. And of course, I bought it using the A1 Live with the A1 Live code. And this is my personal challenge. So DNA did not give me this challenge. I actually bought it. These are the old accounts, by the way. This is the funded account, which I blew. This is the phase 2. This is the phase 1. So just if you're interested. Anyway, good prop firm, A1 Live, 25% off. Let's get back to analysis. Comment section. Let's take a look. AV MVP. Yeah, so congrats to AV once more. Insider trading. Thanks, guys. Thanks, Marco. We'll be in touch. Yeah, I'll send you an email in like 5 minutes. Dow Jones, alt community, did you shut down Zentum? Yeah, so Griff and I were running Zentum. We decided it's best to part ways because we have different strategies at the moment. He's trading purely technical analysis. I'm doing mainly fundamental analysis. So I have a new community now. If you want to learn more about it, check out my YouTube channel. And Zentum is pretty much shut down. But we have moved on to some more different things that we enjoy a bit more, I would say. A couple of trading days ago, metals were overhyped, overcrowded. X and Y reasons for dump. Now everybody wants it again and will likely crush all-time highs. Irrational markets. Well, you could say it. You could say that, but I think the correction in gold has been pretty nice. I think a lot of weak hands were shaken out. That doesn't mean I'll just go in and blindly buy at this level, but I think this was a nice discount. So you could expect another leg down, absolutely. For me, fundamentally, gold is still bullish. Gold is still a buy. I am waiting for the Edgefinder confirmation. I don't want to just blindly go in. So at this moment, I'm not going to do anything. But if we print bullish, this level is fine for me. We are above the 20 MA. We are in a clear uptrend. And I think gold will remain bullish for 2026. I think we can go up a lot more. Right, 5K or what is it? What is this? 5.6K may seem like a huge number, but in the financial markets, a lot more crazier things have happened than gold going to, let's say, I don't know, 6.5 or 7K by the end of 2026. So that is about it from me. We have James coming on after me. Thank you very much for watching. And if you want to participate in more giveaways, I'm doing one giveaway per stream, and I'm streaming 5 days per week. You can find my schedule on the A1 live stream schedule. Good luck in the markets. If you have any questions, you know where to find me. And James is coming up. So see you tomorrow. Goodbye.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. How's everyone doing? Happy, what day is it? Wednesday. Happy Wednesday, guys. Hope you're all well. Seems like there's a bit of beef. Who's got problems in the chat? Interesting. Anyway, Sluggy, Bashi, good to see you guys. Hope you're well. So I put out a tweet. Was it yesterday, day before, maybe a couple of days ago? It was when we had the sort of crash on silver and gold, the metals markets. I decided to buy silver. So I did basically, or tried to do essentially the same as what I did previously with incremental buy orders. So I had an initial buy at 110. I had another one at 100. I cut both of those ones for a small loss, reallocated back at 90 and 80. I've still got another order down here at 70. This one hasn't been activated yet, so, or maybe won't be activated. So I'm looking for around 150. Now, this isn't a swing trade. It's not a day trade. This is obviously a long-term sort of ladder DCA cycle type position. I should also clarify, when it says 20% injection, it's not 20% of the capital. It's 20% of what I've allocated to the trade. So for example, if I've allocated 1%, then there's 0.2% risk on these positions. Does that make sense? I just want to clear that up before anyone gets the wrong idea. But yeah, that's it in terms of the metals. That's all I've got going on, just long silver. I've got a couple of other positions in FX. So I'm long on the New Zealand Swiss. I decided to scale in on this position, which actually isn't looking so great at the moment. So between both positions, it's roughly break even. So no problem there. The pound Aussie, probably on track actually to be one of my best trades of 2026, I would assume. So it's almost, well, we actually did reach 4% profit and then saw a bit of a rejection off that level. But you can see, so at 10%, that would be the final cutoff point. However, that's a bit of a reach. You know, I'd be really looking for the 1.93, 1.92 area. That's sort of the real sort of target, if you will. But there's no official stop. There is no hard stop. It's more a case of at the moment just trailing stop. So you can see we've got the stop trailed at 1.5% in profit here. Moving forwards, long Russell. Now, I don't trade the Russell. I say this quite often, actually. It's not something that I pay much attention to at all. However, I decided to go in basically just on a technical entry. And I'm always in favor of being a buyer of indices markets if they present the opportunity, unless there's a clear reason otherwise, like you know, rate hiking cycle, black swan, whatever there may be. I don't really see that in the picture at the moment. So I decided to enter on a very clean pullback towards the fib, rejection of the 200 moving average, and a break and retest of this previous level of structure. So far, it's running okay. Nothing too interesting in terms of P&L on that one. Decided to go long on platinum as well. Again, platinum's not something I trade too much. However, one of my guys in Elite Traders decided to make a call on platinum, so I jumped in that as well. New Zealand yen. This one is more of just a carry trade. It very low risk. It's more a case of just entering into the flow of the market, letting it run, large stop loss, no take profit, just a catch the flow of the market. And euro dollar. This one, actually is just not doing anything. We entered this one yesterday, and yeah, no development whatsoever. I'm not necessarily bearish on the US dollar. I'm more looking to see if we can get 1.2 to get hit again. So 1.2 has been discussed heavily towards the end of last year, obviously into this year as well, because the ECB has verbally spoken about 1.2. I've said it for a while. I wouldn't expect 1.2 to be a level where we see continuous buying above, but I would expect us to possibly come up for another retest before maybe continuing lower. So with that in mind, and obviously the pullback towards the 200 moving average, let me get rid of this magnet, pull back into the fib, and also previous structure here, it was mainly just a technical play. So yeah, again, not really anything interesting in terms of fundamentals to discuss with you on that one, unfortunately. But that's all my open positions. So I'm quite busy, but yeah, nothing that's overly interesting to talk about, to be perfectly honest with you. He said Bitcoin will dump at 100K. I mean, I think you talk about ICT. I saw his name mentioned earlier. Yeah, I mean, I saw a picture not too long ago about all the posts that ICT has made about Bitcoin. It's like a 100% failure rate. My tweet was funny. Which one, Bashi? Hey James, why are your trades not on Discord? Why? Oh wait, why are your trades not on Discord? They are on Discord. You can see the euro dollar. You'll see New Zealand Swiss. I didn't send. Oh no, sorry. New Zealand Swiss is in there. Pound Aussie's in there. I didn't send silver because there's no stop loss. It's a personal trade. It's very difficult to try and send DCA positions as signals because I have no idea what risk you're taking. It's very easy to blow an account if you're not experienced or capitalized enough to handle a DCA, especially on metals. Russell was sent. Platinum has been sent, but it was on an ETF. I obviously don't have access to that here. New Zealand yen I didn't send because it's not a really interesting trade. It wasn't worth sending as a signal. It's more just to see if I can continue this flow. And euro dollar was sent. So the only one that you didn't get if you're in the Discord was New Zealand yen. When's the Rock album being released? I have no idea what you're talking about, Josh. Yes, Crypto. Just rewind it like 10 seconds. I just answered you. Okay, so let's move forward. New Zealand yen, that's another reason I took it. Obviously, like I said, to catch the flow of the market, but it's also getting a bullish reading on the edge finder. So given the behavior of a lot of these yen pairs are showing, it's very, very difficult to get an entry, especially for the way I trade, which, I like organized pullbacks into a fib, previous structure. I'm just not seeing that really on any of the yen pairs that I want to trade, which is why I went for New Zealand yen, because it's the top rated on the edge finder. And again, it's just creeping to the upside. So it's just a trade that I would expect to sit in and not really have any particularly exciting developments. Pound yen, Australian yen, CAD yen. So we're getting a very bearish sentiment on the yen from the edge finder, actually. So let's take a look at pound yen. That one could be quite interesting. Really nice run actually here on pound yen. So I think maybe there's an opportunity here, but this is where the discretion of technical analysis comes in. So where would we want to draw a fib? We could draw it here, look for a correction of this left side here. That would make sense. However, we could also use it like this, just at sort of the previous swing low. And this one would also make sense because it would line up with this sort of previous resistance here. I've just realized I'm on the H1. Actually, that's probably why I'm not. There we go, H4. So there you go. Yeah. So sorry, I didn't realize I was on the H1. So yeah, I'd be looking for this. Actually, I quite like this idea on pound yen. Not really major structure throughout here, but there's a couple of little things that could act as a little bit of support. We could see a bit of a reversion back to the moving averages. Again, a 50% pullback or a 61.8 pullback. And then just look for a continuation. Very, very simple. The RSI is also overbought, so I wouldn't want to be buying just yet. But yeah, I think actually pound yen is going to go on the watch list. I'll keep an eye on that one. Quite like the look of it. Australian dollar yen also fundamentally is very interesting, but I've not really got anything in terms of technicals. It would really just be the same as pound yen. So we'd be waiting for a pullback. The technicals are a bit more clear here, really. I mean, we've got a bit more structure within the fib that would make me a little bit more convinced that this level could hold. So I think actually Australian dollar yen would take priority over pound yen on a technical basis. So I'd be looking for something like this. But yeah, I mean, very, very simple, basic stuff. So again, actually, I'm just going to add that. Oh, it's already on the watch list. There we go. Oh, buying, yeah, the tweet about buying silver. Oh, yeah, crypto man. It's because I'm not in the A1 Discord. I have my own service. I'm not part of the A1 team. I'm not cool enough for that, unfortunately. Can you cover silver and gold? We've already had a quick look at silver, so we'll go over gold. Yeah. If you can trade platinum, please check $ZAR. What does being able to trade platinum have to do with checking $ZAR? Wait, so what are we gonna look at? That's right. I just said what we were gonna. Oh, gold. That was it. Yeah. Okay, so let's see gold. So I drew this up earlier today, and this is actually why I was sat on the H1 earlier. I was looking, and still I'm paying attention to this level that we're at now on the H1, because it looks like a potentially good buying opportunity, more for a potential day trade, intraday trade. So obviously low, high, moving averages are coming into possibly a crossing formation here, just to indicate that we're out of this downtrend that we saw here, and we're developing back into an uptrend on the H1. So if we can see a bullish candle form from here, that would be quite a nice signal for me to get long, and look to either just take it back up to this previous high, or maybe back up to the all-time high. It really depends how bullish you are and what you want to do on gold. For me, I'd probably just be looking to take it up to this high over here towards, let's say 5,400 for this sake of ease, or maybe this fib extension. But yeah, I'm not overly interested in trading gold. As I've already told you, I'm already long silver and palladium. Sorry, I think I said platinum earlier. It's palladium I'm long on. So I've already got metals exposure. I'm not that bothered really about trading gold. I think overall, I am still bullish. I think we are very, very likely to come back to at least 5,400 roughly. From there, I've got no idea. It's then a point really of, do we, hold on, let me get the brush. Do we come back up to all-time highs and start breaking higher towards JP Morgan's target on gold is around 8,000 by the end of the year? Could be a potential looking point if you're more of a long-term holder and you want to accumulate metals for, again, sort of a long-term hold, maybe. But sort of short-term, normal swing trading, intraday trading, it's tricky because I'm in two minds. I think Nick covered it really well actually in his video about metals. I think it was his day 2 of metals crash video or whatever it was. He said it was like basically a liquidity event. So when we have situations like this, it's very common really for us to get a correction. And, I also say a very similar thing when we have these large sort of impulsive moves, if you will, having a correction is very, very normal. So my point really is, after we get that, what will we do? Are we going to continue down or are we going to continue high? That's obviously the big question. If I could tell you the answer, I'd be going full margin on either way. But unfortunately, I don't have a decisive answer for you. It's more just a case of we're going to have to wait and see. So gold is actually showing a little bit of a rejection here, which is nice. So we've got 17 minutes left on this 30-minute candle. So if you are wanted to be a buyer of gold, and this isn't financial advice or a signal or anything like that, but I am personally paying attention here. If we can reject and get a bullish candle close, I think the long idea of that is completely reasonable. I've just realized half my head's off the screen. My apologies. There you go. Let me just read the chat. Hold on. Got some catching up to do. Where can you get the link? Just go to elitetraders.io. My website will pop up there. Oh, there you go. Nick's just put it in there for me. or for you. Don't forget news. Have we got news? Hold on, let me just check. I've been out this morning, so I'm not up to date on what's actually going on today. Bear with me for a moment. Let me just pull up my news thing. It's been slow. Oh, we've got services PMI. Oh, it's at 3 p.m. Okay, so we've got 15 minutes till news. You had me worried then. I thought I missed another news news release. Bad habit. And that's the thing, actually, about being a swing trader. I often completely miss a news release. And then, obviously, when I'm at the desk the next morning, when I do a review, then I'll see it. But yeah, in terms of actually catching them live, it's a bad habit of completely missing them. Anyway, dollars are getting a bearish reading of -7. So let's see what we've got here. The H1 looks like an absolute mess. So let's go to the H4. Bearish trend. Let's just start top. I've got no idea what's going on here. So I'm going to have to start with monthly and work my way down. So technically a bullish trend on the monthly, but I'm not going to pay too much attention to that just yet. The weekly has just flipped bearish, actually. So you can see bullish formation on the moving averages. We've just had this flip here to signal that actually the bullish trend is over. And technically, we're now in a bearish trend on this weekly. The daily also in a significantly bearish trend. And the H4. So it's tricky because this really depends where you sit with the dollar. And this is where I'm a little bit mixed. So let's have a little look at what's going on with the DXY. Here we go. So discretional trend lines, as always, depends where you draw it. But either way, doesn't really matter which one you use. We're seeing a rejection here. So we managed to break below and technically did close below, but really unconvincingly. And this week we're seeing buyers coming back into the market. So, you know, again, it depends. Do you think we're going to end up coming back up towards the sort of 110 level? Are we going to end up going lower towards 95? Again, depends on your view. But the interesting thing is, although the edge finder seems a little bit bearish on dollar ZAR, if we look at the eco strength index, which is a more long-term view, so as opposed to top setups, which is more of like a right now type of idea, the strength index is more of like a longer term swing trade, maybe position trading sort of data. The dollar is actually the only one or the only major currency getting a bullish reading. So that's where I'm a little bit not confused. That's not the right word, but I'm a little bit like I don't want to be short, but I also don't want to be long yet, just in case I'm too early on that idea, or you know, the data completely crumbles and we do end up with a bearish dollar. So right now, I would say my bias is actually long dollar short term, and then reassess how we behave around the 99 to 100 level. If we just stay in this range, then it would just be a case of long dollar at the low of the range, short dollar at the top of the range, and just play the range on the weekly time frame for the dollar. But yeah, that's it. So going back to dollar ZAR, although yes, we're in a very bearish trend, I am not in a position from a bias point of view to do anything here. Maybe that's a little bit of a longer explanation than what you needed, but I was also wanted to fit my dollar idea in there as well. Short-term fundamentals favor the ZAR. Yeah, that's the I don't trade the ZAR at all. I pay no attention to its fundamentals. So in terms of like central bank policy, I have absolutely no idea what's going on over there. So my view on it is my input, I suppose, is very limited, but that's my view from the dollar standpoint anyway. Okay, let's go and have another look. So Euro Pound's getting a bearish reading, which is interesting because you know, everyone was trying to buy Euro Pound at one point. Let's see daily. The daily is looking rough. So yeah, I wouldn't obviously want to be a buyer. The trend is looking a little bit precarious. The edge find is bearish. So I think the excuse me, the easiest way to trade this market really would be just looking for corrections of this left side, because the Euro Pound had a really, really good period. When was this? This was sort of the In fact, yeah, basically all of 2025, actually, the euro pound's had a fantastic run. So there is the potential for it to have a complete correction this year. Now, not even necessarily just from a data perspective, but also from the general market behavior that we see with euro pound, because both of the economies are very correlated, very similar to the Australian dollar, New Zealand dollar. It typically just stays range bound, as you can see here. This is obviously a daily time frame, but overall, it's just sideways. There's not really anything going on. So to look for shorts on both sides, on a fundamental side and a sort of market behavior or mean reversion perspective, both make sense. So I think what you could do here is just look for very simple pullbacks and just look to join in on this H4 trend. So the fib isn't overly clean, to be honest with you, but maybe something like this. We've already broken and retested, but there is the potential that we could come and sort of double top here. Or if you're looking for a bit of a shorter term trade, maybe something like this. That's not my ideal type of entry, but yeah. So that's basically all I've got for euro pound right now anyway. Is it bearish for gold? What, the dollar or what? Euro versus euro pair. Yeah. That big candle on dollars are also mirrors the gold crash. I didn't even pay any attention. Let's see. You are right. Yes. So yeah, maybe you could get a bit more of a correction to the downside on dollars are, but again, it's just not my cup of tea. So something I was looking at on Bitcoin, I've got about 8 minutes left. So I'm not sure if I already covered this with you on last week. I don't think I did, but I was talking with my team about Bitcoin because you know, bit of a disclaimer. I always say this. I don't trade crypto. I'm not a crypto guy. I have some Bitcoin on a ledger, but that's it. I don't trade it, don't touch it really. So my knowledge is very limited. So I, you know, naively maybe was thinking, oh, we're coming down to this 200 moving average on the weekly. It could maybe be a good buying opportunity. However, I did a little bit more of a dive on the technicals here. And what we see is back in 2018, we had an 80% crash. In, when was this? 2021, we had a almost a 78% crash. Are we having another situation like that where we crash? Now, something else to keep in mind is actually this one came down towards the 100 moving average. This one came down to the 50 moving average. So even if we came down towards the 100, we could potentially see Bitcoin come to 50K, maybe 20K, depending on the extremity or the what's the right word for that? The severity of the sort of crash that we're having on Bitcoin. I wouldn't rule it out. I know I might sound like a bit of a doomer. Again, I don't have any play on Bitcoin. I couldn't care less. But just from the sort of historical price action and the historical crashes that we've seen, it's definitely not out of the question. So my question is to you, if we saw Bitcoin come down, let's say 30K, would you still buy it at 30K? I know that might seem like a obvious yes, but I think what we've also got to account for is the liquidation event we would see on Bitcoin if we continued running down towards that level. Not even just in terms of like, you know, people losing money, but like, you know, MicroStrategy, for example. I don't really know much about them, but maybe they would get liquidated, which could have a massive impact. Maybe some other people like big Bitcoin holders. Anyway, again, I'm not a Bitcoin guy, so I don't really know what I'm talking about too much, to be honest with you, but it would be a bit scary, I think, actually, if we did see Bitcoin at 30K. I don't think it would be as simple as just buying the dip. I think it might be a little bit more of a shock. James, the BOE and ECB have rate decisions tomorrow. I think it will give Europound some direction. Potentially, I've heard word on the street, and when I say word on the street, I mean from sort of the bank reports and institutional views that I've read. The Bank of England does actually have potential to cut rates in the next decision, whereas the ECB has almost a 99% probability of holding. So, if anything, we could see some upside, but again, I wouldn't expect a huge divergence to play out in terms of enough to warrant a a serious bias from a divergence perspective. Vlog to the moon, gold to the moon. I mean, yeah, again, as I said earlier, there is sort of Wall Street, I guess, is looking for around 7 to 8K on Bitcoin. Sorry, not Bitcoin, on gold by the end of the year. So whether that happens or not, we'll see. People are shouting to buy the dip on Bitcoin. I think it's a little bit naive to buy the dip right now. And again, coming from my uneducated point of view, but I just think we could come significantly lower. Again, you know, that could not happen. That we could just see a little bit of a pullback to this previous high, and then we just continue to rip and hit, you know, 150K. Maybe, I don't know, but I'm not willing to take that chance just yet. Can't wait for ISM. Should support the ADP. Yeah. Well, you've got Alan Perez on in a couple of minutes, so he will, I'm sure, cover the news with you. Alan's a very knowledgeable market guy. So let's just have a quick look. DAX is getting a bearish reading, and the NASDAQ, actually. I didn't notice that. So let's have a look at the DAX. It seems like the stocks are having a little bit of trouble at the moment. And the thing, well, I should say the indices market's having a bit of trouble at the moment. I heard Nick say there was something about earnings. I'm not a huge stock guy in terms of like pay attention to earnings and things. I'm more trade the indices markets based on rate cycles, rate hikes, rate cuts, and obviously black swan events and things. But in terms of earnings, I'm relatively out of the loop, to be honest. I'm not a stock trader at all. However, the fact that we are getting a bearish reading is interesting. So it was NASDAQ that got the bearish reading. Now, it's tricky. I suppose what you could maybe do, and this isn't the way I trade, but there is the idea maybe here of just being a breakout trader. So you could essentially look for breaks of support, look for that momentum to kick in, trade it into the next level of support, and basically just keep doing that. So if we break this support, you go in, momentum trade all the way down to the next support, which will be down here, and you basically continue to do that. Now, I only trade like that in certain situations, so I wouldn't do it here, but excuse me. Hopefully you get the idea. How long are you planning to hold your winning trade? Depends which one you're talking about. If it's silver, then I'm not really looking for a timeline. It's more if we get to 150, I'll look to take profits or cut the position, or sorry, trim the position. But yeah, I've got quite a busy portfolio right now, so can't really give you a definitive answer. Getting ready to buy the DAX. Fair enough. Okay, sweet. So yeah, in terms of the indices markets, let's see. I wouldn't really feel comfortable doing anything here, to be honest with you. The H4, yeah, you know, you could maybe say buy the dip on the H4, but the problem is it's just sideways. So yes, again, you could buy the dip and maybe would get that breakout to the upside, but the fundamentals right now are against that idea, and it's not looking good for the buyers. I mean, the bears in this market are looking quite persuasive, to be honest with you. I suppose the redeeming factor would be the daily time frame. So we're still in a very healthy bullish trend. We're coming down, maybe a double bottom here. But again, on that idea, if we end up breaking below these lows, there could be a really nice short opportunity. Now, the last thing I'm going to say, because I've got a minute left, is just to bounce on that idea. I really hope I've still got it. I don't. Hold on. I've deleted it. I think, have I? Yes. Okay, well, I'll remark it up really quickly. Every time we see a crash in these markets, we see a correction back to sort of the post-crash price. Does that make sense? So like here, if you just look at this really quick, COVID crash correction, we didn't actually pull back all the way, but I suppose we used it here as a little bit of support. But even after this downside that we saw here, we rallied and then crashed back down to the 200 moving average and this previous level of resistance. We crashed here. Are we going to use this level again? So there is the idea that we might come down towards 6,000, let's say, for round numbers sake. Now, Again, I don't want to sit here and sound like a doomer or like I'm waiting for the crash. I'm not really that type of guy, but it's something to keep in mind and pay attention to. Anyway, ladies and gentlemen, I am going to head off. Thank you very much for having me and being here. Don't go anywhere. You've got Alan Perez coming to take over the show. You're in great hands with Alan. So I'll see you all tomorrow. Stay safe and don't get margin called.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Let's go ahead and see the reaction on the dollar. Let me hide this here. So dollar index here on the daily. How's everyone doing today? Doing pretty well. So that was going to be the main focus for the week. We did have NFP come out, or supposed to come out on Friday, because of the government shutdown. They kind of, withheld that information there. Maybe we missed a bad jobs report. Who knows, right? But we're supposed to get it sometime in the future here. But for now, job report, NFP is still not coming out. So the main focus was now on ISM services. And it came out good for the dollar. So that's good to see there. Going to see ultimately what happens at the 98 handle for the dollar index. And I'll go ahead and look to proceed with that. My Aussie dollar position is probably giving back some of its gains, which is okay. Like I mentioned before, I am looking to go ahead and add into the position at the 61.8% retracement level. But nonetheless, we're still in profit here. I got in at the initial 38.2. Looking at other pairs here, euro dollar, I got out here at the 61.8 or just shy of it. We're still pretty much flat between the 50 and the 61. So nothing crazy going on there. We did have the Kiwi dollar give a mixed jobs report. So growth ticked up, but then unemployment rate was not good. So kind of stalling out here, showing some relative weakness against the other peers. Interesting chart that I'm kind of curious about. I'm not looking to participate or short this thing by any means. But if the dollar index does go ahead and start sliding at that 98 handle, I think dollar yen is presenting a good setup for short. We're at the 50-day moving average. We filled in this gap here, this little pocket. Maybe we take it lower. Remember, as we were approaching the 158, 159, ultimately that 160 handle, that's where you get that intervention risk. The Fed would have helped, or the Fed helped the Bank of Japan as far as getting the rate check to see what that cost would look like. And that within itself went ahead and added some selling pressure into the dollar yen. So perhaps if we creep back up into this area here, anything within here, you put yourself at risk there. So maybe a good sell opportunity here for the dollar yen. Maybe if we get the reading on the edge finder. I know for the most part right now, the dollar counterparts are doing pretty well. So if you just go to the major currencies on the top sales page, if everything is still the same here, yeah, you have New Zealand, Aussie dollar. Things are kind of getting in the neutral camp, which is interesting to see. I like seeing that, especially as we get into a decision point on the dollar index here. So maybe we can approach this level with a very clean slate, go with the data moving forward and see what it looks like. But yeah, let's see. I think dollar yen short will be good at that level, but obviously we need to see a proper reading on the edge finder. We need to see some maybe some misses in the U.S. economic data, and then also that intervention risk as well creep back into the picture. But for now, I mean, we did have some PPI last week was pretty sticky. Services doing pretty well as well. So actually that could kind of go ahead and counteract that, but we will see how it starts to play out. Bashi saying no audio. James, can you hear me okay? You hear me now? Okay, cool. All right, seems like let's see. Do I need to recap what I said in the beginning? If you could just let me know what was the last thing you heard or the first thing you heard, I'll be more than happy to go back if needed. But essentially, it's good now. It was just the last first 10 seconds. Okay, no worries, no worries. Okay, awesome. Well, let's go ahead and look at some trades that I'm in right now. So we heard 99%. We're all good. All right, cool, cool. You guys scared me a little bit, guys. Don't do that. So the Aussie dollar, right? I'm in this trade. Someone asked me in the Discord, very valid question. Do I think it's gonna pull back? You know, do you miss a trade? Whatnot? I wouldn't add anything after this 38.2%, this initial level. So anything above it, I'm not going to be adding. I'll be just chasing price. If anything, I was already aggressive with that 38.2% retracement that when we dipped into here. So if anything, I'm actually looking forward to maybe getting a deeper pullback in the Aussie dollar. I know that sounds crazy, like I want to be in drawdown, but not much drawdown, right? It's only going to be about 98 pips from my initial position, which if you're looking at the grand scheme of things, like this bigger picture, like this bigger move, if I were to get filled right there, I have potential 250 pips of upside. So I'm looking at that as a potential, you know, re-entry or adding to the position, but ultimately not looking to put any more on to the position after this level. I think we might get a little slow grind higher, especially with ISM services out of the way. We'll see how the dollar index ultimately digests things. If we just go to the 1 hour time frame, pretty flat, nothing crazy going on, but we'll see how that kind of goes and continues. But slow grind higher would be good for the Aussie dollar. If anything, if we start like approaching like this high here and everything like that, then I'll just trail my stops a little bit. But ultimately, I'm looking to target this level here. If I go to the weekly time frame, this is something I've discussed before in the past, but you know, this level originally right here was a very, very strong level. This 6,900 level, this 1, 2, 3, this was resistance, right? We poked above it with some force. We pulled back into it slightly at that 30.2 where I initially got in. And then the next level that I'm looking to go ahead and catch is this one right here. So that's 7,200. If you just look at the past here, looking left, that's another level that I'm looking to ultimately take my profits on. Now, past that, I don't know where we're going to go, right? I don't know if we're going to break above it or flop on that. Obviously, that's a task for the later. But for now, the fundamentals are pretty lined up in favor of the Aussie dollar. You had sticky inflation. You had a rate hike just earlier this week on Monday. And then you have also, you know, their forward guidance was inflation's elevated. We're looking to act on that if needed. So pretty good story there for the Aussie dollar. So I'm really happy to finally be in the trade. I've missed this whole trade. I've been pretty adamant about Aussie dollar since like way early on, like way over here. And I have just been too aggressive or too conservative with my entry points, looking for these deeper pullbacks that we never ever get. And so that's why I kind of had to just go for the 38.2. So at the moment it's working out, but at any moment things can flip. This thing can go against me. What are my risks, right? If we get a strong dollar, that's obviously a big risk for me. Another thing that is at risk for me is metals. Aussie dollar thrives on the exports of gold, right? Big thing. So when gold is doing well, Aussie dollar is also benefiting from that. So that little push that we're seeing in gold is somewhat translating into the Aussie dollar. Not a one-to-one correlation by any means, but just another layer of confluence that you can look at. So always be mindful of that, guys. So like whenever gold is doing well, Aussie dollar tends to do well as well. When gold tends to flop, Aussie dollar tends to flop as well. The other caveat is risk on, risk off. So if you're in a risk on environment, the Aussie dollar is considered a risk on currency. Same thing with the Kiwi. So those things really do well. If you see a broader risk off move, then you'll see gold rally, but then you'll see Aussie dollar fall. So that's the little caveat there. But for now, like things are pretty steady in the market. Like no geopolitical tensions are seeming to be cooling down a little bit. You have supposed advanced talks with US and Iran and things like that, although we did shot down the drone. But come Sunday, we're going to supposedly meet with them and see what happens. But for now, things are pretty steady. So gold's getting a little bit of a bump, a little grind higher here. I'm sure a lot of you guys have questions on, is gold going to continue higher or is it going to flop? I don't know. I made a post in the Telegram channel. And by the way, join the Telegram channel, completely free value. But one of the things I did was basically highlight the overall theme is still somewhat supportive of gold, but you're getting a strong dollar. You're getting the pricing in of a potential slightly more hawkish pick than we thought. But then you do have like geopolitical stuff, right? One of the things I always mention is, given the current administration and things like that, the not necessarily like the administration, but just the choice of words and his ambitions of like acquiring Greenland and things like that, and Cuba, and being somewhat aggressive, that obviously instills volatility into the market, and so gold thrives off that. And so to say that that's coming to a complete end is I think is a little bit foolish. I do think down the pipeline we will have another escalation of some sort. Maybe it'd be tariffs, maybe it'd be something fresh. Who knows? But I do think that that is to come sometime in the future. So I do think that the overall picture longer term for gold is to the upside. And other banks agree with that as well. You have like your JP Morgans and your Morgan Stanleys and all that good stuff. They're raising their targets from like 6,000 to 65 or 62. So I do think that the upside is there. I'm just waiting for a pullback, right? So do I think it's going to go up or down? I don't know. I think it's most likely going to go sideways for now. So the 200-day moving average could be a very fantastic entry point if we do end up getting there. I don't know what will ultimately get us there. Maybe we get another flash crash, which will be, if you just think about it. So this one from low to high, or from high to low, was 21%, and then this one is only 32% away. So it's not too far away if you just look at the recent dip. So if we get another dip just like that, then we will most definitely get to that 200-day moving average. And I think that would be a fantastic buy opportunity. Even if you're thinking of it like more long-term, right? Just more long-term, I think that's a good way to start a potential dollar cost average position or a trade position, whichever way you want to approach it. I think that'll be a good level. So one thing that I'm going to be looking at, in fact, I'll put an alarm, add alarm to this moving average here. So we'll see, bump it up a little bit here. Something like that, because as it comes down lower, this will obviously creep up with it as the bar count increases. So maybe something around that 4,000 area would be a good level that I'll be watching for gold here. Silver, different story. Silver, I think, was a little bit more memeified than gold. So this one was a very, very erratic, very parabolic price action. We're now at the 38.2% retracement level. I think once we get to the 50% retracement level, that's where you get that real risk of bear stepping in and getting another chance to take it lower. But we'll see. This thing had a really mean run up, and when you add euphoria and basically a lot of retail crowd and a lot of leverage and things like that, you get to see moves like this, a correction. It's just due. It's funny because I saw like a lot of people, I was starting getting a lot of videos on my feed, like people going to buy gold or sell gold or buy gold, or just a lot of transactions within gold. And people were buying big money, like, and this is just an average person, like a good portion of their liquid net worth into silver at these like 120s, 116s levels, right? Like they were buying the top, which is crazy to see. So usually the saying goes like, when you start hearing your cab driver talk about a certain asset, that's when the top is in. So I think like we got a similar situation with silver. Everyone was very euphoric at the highs. We just got a little bit of correction. We'll see how the overall picture sets up here. But we do have a deleveraging story, most certainly a deleveraging story in metals. Let's see. Let me look at the chat here. New Zealand may become sluggish. Yeah, so that's something I have in the back of my mind, right? So New Zealand mixed outlook here today, showing a relative weakness here. Before I say anything, let me go ahead and verify with the Edge Finder. And I recommend everyone do this. If you have an Edge Finder copy, do this before you look at a trade. But I have a certain thing in the back of my mind, but I'm going to confirm it here. And to those that don't have the Edge Finder, seriously consider getting it. It's a tool that has helped me tremendously here. I love the thing. Continuous updates all the time. Institutional players that are trading these markets, they don't guess. They have systems just like this. Maybe it looks a little bit different than this, but they have systems nonetheless that automate all of the tedious task of data collection and all that good stuff. So if you take your trading serious and you want to participate or perform at a high level, obviously you need some tools in your toolkit. And if institutions are not doing things like this by hand, neither should you. So definitely go ahead and copy you an Edge Finder. So let's look at Eco Surprise Index here for New Zealand dollar. Someone said, is New Zealand becoming a little bit sluggish? Not yet, right? As of the latest right here, not yet. It's still getting a very good score. However, with this recent miss in the jobs data, maybe that could be the start of a new trend for the Kiwi. So we'll be monitoring this. And one thing I'm looking to do, if the dollar index does catch a bid, then I'm looking to go ahead and start searching for ways I can go ahead and long or short the dollar, go along other assets. One thing I'm looking at is Swiss franc is improving a little bit. It was at 10%. Now it's at 33%. So we'll go ahead and see how that improves there. Dollar index, as far as the technical outlook here, I mentioned this as well to another member here in the group. Someone said, why don't you just buy into this level of what could be resistance and then repivot once we get there and then short it? And then I was like, I don't know, man. I don't know if we, like, ideally you want to get there, but you don't know if you will get there. And it seems like if this continues, dollar Swiss is very sensitive to anything against the dollar. So if you get any hints of like sell America or anything like that, dollar Swiss will be the one to go ahead and move, and it will move very, very fast. So looks like we're kind of pivoting here. Maybe this is just a slow grind higher, but we'll see how this reacts for dollar Swiss. One thing I wanted to do was participate if we get up here, but I'm also not going to short and chase price if we just continue lower. There's lots of downside, though, to go ahead and look at here. So if you just look at the weekly time frame, you do have that 7,000 level ultimately is a good level for the Swiss. If I miss the short opportunity, so let's address it, right? If I miss the short opportunity at this level of resistance here, what do? Well, I'm just going to have to wait. I'm going to wait, and the better trade, in my opinion, would be to go ahead and buy it at these levels here. Very, very extreme discounted levels. Last time we got there, we had a very strong wick higher here to the upside. So I will pretty much have an alarm here. And if we do start creeping here lower, then I'll just put an open order, like a limit order, to go ahead and buy into that. But I would be more than happy to go ahead and buy dollar Swiss at this level. We would need something big for that, to be honest. I don't see it happening. But are you talking about gold, Bashi? I think you're talking about gold, a deeper pullback in gold. I don't know, man. I think anything can happen. You still have like wars. It still needs to be approved, of course, but like, I don't know. I think there's some kind of risk there. Wait, Alan, cab drivers are talking about gold. No, it's just a saying that like when the average person that's not very familiar with markets start making like huge predictions or very firm speculations, is when basically you're at the top or the bottom of a move. But no, I didn't have any personal experience with cab drivers talking about gold. Would you mind giving your insights on gold or Bitcoin? Yeah, of course. So I was talking with Marco yesterday. He educated me about the halving cycle, and it does tend to mature as the cycle does approach to an end from my research. And Marco did mention that the halving cycle is due to end. I think he said September, October, towards the end of the year. So I'm assuming Q4 of 2026, which is this year here. So we'll see. That's some bearish sentiment. You also have the underlying picture of the carry trade slowly unwinding, right? So if you just look at yields, right, this is the 10-year yield in Japan elevated. If I look at the 30-year, I'm sure it will be very similar as well. Yeah, it's still elevated. So that's the story with Bitcoin, right? And for those that are pretty new to this, or I'm sure it's been talked about, but for anyone new listening, in a very short summary, people go ahead and borrow money in the Japanese yen because before it was very cheap, right? You had zero rates, negative rates in the past. Now people go ahead and get that borrow money and park it into higher yielding assets, whether it be the US or in this case right now, the Australian dollar, or maybe Bitcoin or US equities, whatever the case may be. They take cheap money with zero interest rates, perhaps, and then they go ahead and move it into the higher yielding asset. Bitcoin in the past has been a very high yielding asset. It's very speculative, but it has very, very high returns. So it makes the trade worthwhile. Now you're getting elevated Japanese bond yields. And basically what that indicates is higher rates in Japan. the Bank of Japan is looking to intervene. So they're looking to go ahead and, make the Japanese yen a little bit stronger. They're looking to actively raise the interest rates, right? They've been voicing that as well. And so if you raise the interest rates in Japan, that spread is going to narrow between the rate you borrowed at within the yen and the rate you earn in Bitcoin. And so that becomes less attractive. And so for the people that are highly leveraged in the assets, they're forced to liquidate, right? Because it's not becoming as lucrative. Maybe they search for another vehicle to do that. So that's basically the story with the Bitcoin and the Japanese yen and the carry trade unwind. We're seeing a little bit of that. We also do have this level of support here, right? Which from a technical perspective, I think is a solid level of support. Though if we do break that level, then it does become a little bit risky. If you just look left here, we have lots of downside at risk, right? Another thing, very small story, but nonetheless, it can add to sentiment. You do have these leveraged companies like, for example, MicroStrategy Solutions, MSTR, or now known as Strategy, very, very invested in the Bitcoin story. They believe in it. Their whole theme is like, they buy all the Bitcoin and wait for it to go up, basically very simply, but they're also very leveraged as well. And so in MicroStrategy's case, you do have that 76,000 level as their average cost, right? So anything below 76,000 they're in the red. So at one point they were up like $35 billion at the high here in profit. Now they're down $1 billion, right? So if this thing does start to creep lower aggressively, then perhaps, this is just my personal speculation, but then perhaps you get a deeper unwind. You have some of these more bigger leverage funds having to take positions off, and maybe that adds to some added, bearish sentiment. So one thing to think about, MSTR's holding in comparison to the overall market cap and the overall holdings of all of Bitcoin, relatively small in the grand scheme of things. But if you get a handful of these guys having to force their way out, maybe that adds to that sentiment, and then you can see a sharper pullback in Bitcoin. So yeah, that's just my take on it. Do I think it's going to go higher or low? I don't know. This is the only level that I'm looking at, that 70,000, 74,000 level here, just because it looks clean from a technical perspective. I don't actively trade Bitcoin. I'm not super knowledgeable in Bitcoin. This is just a high level, what I've gathered here about Bitcoin. So hope I answered your question, Aliba John. I did go ahead and put a post about it in the Telegram channel. So I'll go ahead and put that in there. Consider joining the Telegram channel, Mr. Aliba, and anyone else watching. I'll talk Bitcoin. I'll talk Forex, indices, gold, anything, oil, all that good stuff. If it's a chart worth watching and worth knowing about, I definitely go ahead and do my best to go ahead and put it in there, just so you guys know. For example, like New Zealand dollar with the mixed jobs report, I went ahead and put that in there today. Super important chart that you guys should know about as far as currencies. And yeah, man, so definitely go ahead and join. I also do quizzes at the end of every single day. So yesterday, or not yesterday, but the other day I did about at the time, the CME raised the margin requirement on gold, right? And so that caused some little bit unwind, or that was a part of the reason why gold was falling very, very far, or a lot. And so what I did was I basically put a question about that, right? To kind of just test your knowledge and keep you guys sharp. And that way you guys are being quizzed, but you're being quizzed on relevant topics in the now. So basically just did, what is the immediate impact of margin increase on buying power? Put the answer there. Got lots of responses, 751 answers. So I'd love to see you guys being engaged there, and we would love to, have more of you guys in there as well. So definitely feel free to join. It is my pleasure to help you guys have a good experience and helping you guys on the trading journey. You got that one right. That's good, man. That's good. Sometimes I'll do hard ones. Sometimes I'll do easy ones. But you guys are pretty smart for the most part. Like, you guys are always getting the majority right. So that's awesome to see. You like the closing bell quizzes? That's good, man. That was just something I thought about on the fly one day, and I was like, let me just implement it. So, but yeah, it seems to get good traction, good reactions, and good participation. So I'm happy to continue doing that. And if you have any more questions on or suggestions on improving the Telegram channel, I believe the people at A1 were doing a sale on the VIP Discord. But if not, nonetheless, still go ahead and join. I'm in there. I'm pretty active. If you just at me or mention me in there, I'll be more than happy to respond to you guys and help you guys any way I can. So definitely go ahead and be, participate into our services. We would love to have you guys. Your questions are tricky. That's good, man. That's good. If you just like, the thing with the questions, if you were to get the question wrong, I always put an answer. So like right here, it'll pop up if you just click the little light bulb, and that'll give you an explanation. So, typical test taking procedure. If you get a question wrong, read the explanation behind it, and then you will most likely get it the next time. So I try not to repeat. Actually, I haven't repeated any questions, but sometimes I do run out of ideas or whatnot. So I go to like a test book that like an old like Series 3 textbook and stuff and put that in there. But for the most part, things are very, very fresh. Yeah, it tells you the answer after that. That's right. Okay, let's see what's going on here. So on the weekly time frame, one thing I did say was that the dollar index here is printed this, what could be a very bullish candle, right? We had this mean drop, big wick here. Perhaps this was a fake out, and now you're trading it to the upside here. So that $98 handle is something I'm very, very much looking to go ahead and see. We're getting neutral readings on the edge finder, which is a good thing. So we can go ahead and approach this with a very clean slate. Equities are seeming to rebound here. We do have NASDAQ leading the way lower here, showing to relative weakness, but we are getting a pivot, a rotation into the broader market, which is pretty healthy to see, though things are pretty elevated. Like, we really haven't had any meaningful pullbacks. If I'm a trader of equities, US indexes, if I'm choosing one, I'm choosing either the S&P, the Russell, or US 30 here. Preferably, my choice would be the S&P, but it would be S&P at that 6,500 handle. Good level of support, and the 200-day moving average has now found its way at this level of support. So hoping that it will be a very much an A+++ setup if we were to get the S&P for some reason trade at the 6,500 handle. It would most likely suck in the meantime. A lot of panic, a lot of people will get flushed out. It will be a lot of pain, but ultimately a very, very good level to go ahead and purchase S&P. So something I'll put an alert here as well. Okay, as far as currencies, pretty quiet. Not any big movers, I would say, after this ISM services, though that is good for the US because services is the bigger component of growth in the US. So when you think of like what GDP is compiled of, it's manufacturing and services and everything else. And services is the overwhelming big majority of that. So that's really good for the growth story in the dollar or in the US. So that's why you're seeing a little bit of a bump here in the equities. Yeah, man, you're gonna make me blush. You're gonna make me blush. Come on. I'm in front of a lot of people here, so it can't be doing that to me, Bashy. Any chart markups that you guys want me to look at here? I know most of the big data here is behind us as far as ISM services. We had Jolts canceled yesterday. NFP doesn't seem to be coming out today, or not today, Friday. So let's go ahead and see if anything has changed on that front as well. Nothing really, but I'm very much open to, helping any chart markups, any suggestions. Maybe you're in a trade and you need help navigating it, or just my feedback or my opinion. Again, nothing's financial advice, but I'll be more than happy to help any way I can. I do have 2 minutes here, so maybe I can do one chart before I head out. Waiting for a yen intervention, but it's been quiet. Yeah, Bashy, I agree. So let's talk about that real quick before I head out. So yen intervention, dollar index is catching a bit here. I'm going to be very cautious if we were to get back into this level. I'll be actually kind of happy if we do get into this level, because then it's another opportunity to participate. So let's say hypothetically that we were to approach this 158, 159, ultimately this 160, all right? If we're back at this territory and we see more talks about yen intervention, right? Bank of Japan starts voicing their intentions, then I think that's a good trade to take it to the downside, right? Obviously, wide stops, very small position. Yen is very volatile. There's also some heavy swaps associated with trading it to the downside as well. So something to be mindful of. But yeah, I mean, if you already have the Fed that was somewhat helping them in achieving that objective of intervening by checking the rates, then maybe once you get into this 160 handle, anything above here, they already have all the information they need. They can go ahead and act if needed. Remember, the thing with the yen, the tricky thing is not so much of a level like 160, 158. I know I'm voicing those levels, but But when it comes to yen intervention, it's not about the level itself. It's about the speed of depreciation. So if you get a fast run up here in the yen up into those levels, then that risk of intervention becomes very, very much alive. If it's a slow grind, then it's not as risky, but you still have to be somewhat mindful. So that would be my take on the Japanese yen. Guys, again, thank you guys so much for watching. Super happy to be here on the live streams. I will see you guys again next week. I'll be traveling here this weekend, but I'll see you guys next week. Join the Telegram channel and get yourself a copy of the Edge Finder if you can afford it. I promise you that it will pay for itself 10 times over, right? So, and you have all the resources as well. You have the live streams, you have the Discord group. So if you have any questions or anything, feel free to give us a chat. You have some awesome people behind the scenes as well on A1 Trading that will help you with any questions. So consider getting a copy of the Edge Finder and join the free Telegram channel. But with that, I will leave you guys. Have a blessed rest of your day. And like always, trade safely, everyone. Bye-bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.